YouTubers! Mike Martin's here, Mike Martin's channel, teleprompter free. Here to add a little bit of light to the housing crisis, the darkness we're sitting in that a majority of the world is completely oblivious to. And it's the most talked about topic everywhere you go. Everywhere you go. Everyone's talking about the housing crisis. Here in this town I live in, Merritt, I hear people talking about, oh, those people in Vancouver, how can they afford to live there? $3 million for a teardown. Oh no, things are not looking well down there. Well, yeah, they're not looking good at all. And I got an article that ties in really good to all the speculation and discussion that's going on. And I want to share this with you guys. It is by Don Pitts. I've read some of his articles before. He's a really, really good analysis. And he goes on to say, relying on rising home prices could be a fool's strategy, by Don Pitts. The greater fool, justification for paying more than you could afford, is wanning. Not winning, wanning. Buyers may find it rational to purchase homes they cannot easily afford if they expect prices will continue to rise rapidly. This article has only 990 shares and 511 comments. Very, very underrated. It should be 20,000, 40,000 shares. And it's a very small group of people that understand what's really happening. A really small group of people that think outside the box and think for themselves. And a lot of people that do watch my channel and a lot of people that follow me here on this channel and listen to my ranting and all the bull crap I bring up and stuff and just understand and know that there's a bigger underlying agendas happening here. And the people that are awake, I'm very happy, and someone was telling me the other day, you should have a lot more subscribers on your channel. I mean, I see other channels and they're just not really putting their 100% or they're just doing it to get AdSense money. And I'm like, you know what? I'd rather have like very to little to no subscribers, just that I could get a small group of people to understand points of views and comments. If you look at the comment section, we have incredible comments on here. Other places you go to, it's just, and you look at some of the comment section, it's like, oh, wow. Anyways, let's go on with the article. New data from Canadian Real Estate Association indicates the rules have suddenly changed for people trying to buy into Canada's pricey real estate markets. The latest CREA figures are not in themselves worrying, showing prices are roughly flatline. Of course, an average figure disguises wide differences in areas such as Toronto, where prices continue to soar, and Newfoundland and Labrador, where they have plunged 10%. I keep used to saying points. Keep plunged 10%. Average Canadian house price barely increased in the past 12 months. And that's what we're talking about in BC here, in Vancouver area. But it averages mean anything. Canada as a whole has reached a turning point where, on average, one of the strongest justifications for paying more than you can really afford for a home has disappeared. The fundamental reasons for a slowdown in real estate are various. A change in rules for foreign buyers has hit the Vancouver area. The crash in oil prices from the 2014 peak near $100 US a barrel has hit oil-producing areas. For more sophisticated buyers, fear that the North American interest rates will rise may have an effect. So if you're on one of those variable rate mortgages, you better want to get with your bank and refinance or look at getting something with a solid rate. But the effect of flat property prices on potential buyers has much more to do with psychological than traditional market fundamentals. That does not weaken its effect. Timing could be everything. So then it's the timing of the market is one thing I really don't agree with, guys. Timing the market's really bad. Be really wary about that, okay? The justification for overpaying for property or any other speculative asset is sometimes called the greater fool theory. Former federal minister and business journalist Garth Turner wrote a book on Canadian property market called Greater Fool, A Troubled Future of Real Estate. And it looks like it's an interesting book here. Former federal minister of financial journalist Garth Turner warned about the strategy of paying too much for a home while assuming the price will rise. You see, that's like robbing Peter to pay Paul. It's really tough. Like timing the market. Okay, I have timed the market. I'm not going to lie. I have. I've bought into shares. Like, remember when Nintendo was going nuts? I timed the market. I bought into Nintendo. And it dropped like a rock because I timed the market. I got it at the wrong time. I got it when it was going way too high. And if I just not relied on that or timing the market, I wouldn't have been out a little bit of money. But it happens, and these are mistakes you got to live by, and that's the mistakes you got to learn by, right? Of course, if you had bought a house using the Greater Fool strategy in 2008, in most parts of Canada, you would have done very well indeed. There have been a few better investments. But when markets are changing direction, timing is everything. The essence of a Greater Fool effect is that buyers may actually know they are being fools by buying overpriced assets. They walk in with their eyes wide open. It is possible to make money by buying securities, whether overvalued or not, and later selling them at profit because there will always be someone, a bigger, greater fool, who is willing to pay a higher price, explains the website Investopedia. So there's a little picture here of a Jeep or something parked out at a house. It's saying, average house price in Toronto rose more than 20% in the last year. And then it goes on to say here, in the stock market where prices can continue to go up, stock market, due to popular euphoria long after a decline has been signaled, the Greater Fool strategy depends on being sure that you are not the greatest fool. You must sell just before the market madness ends. Getting in deep. The danger in the Canadian property market is subtly different because prices have been rising so quickly and until recently so reliably, and because the prices are so high, the most important consideration may be that many Canadian buyers have been knowingly getting themselves in too deep. Perhaps the most important speculative fever thrives on expectations of rapidly raising prices, rising rapidly enough that buyers find it rational to make bets while they normally can't afford. Said The Economist magazine. Try placing a bet like that with a bookie and see what happens. You got to be really careful, people. Like, this is, especially if you have a family and you got everyone's depending on you. This is a big mistake. You gotta timing the market is, it's like I said, I think it's the foolish thing you could do. The quote was in an article about the market the market of collectible sports cards, but the phenomenon applies just as well to houses. I don't know if you guys remember sports cards. Back in the early 90s, it was a big deal. Sports cards were the thing. But what they did was the companies that were printing the sports cards got very greedy. And what did they do? They over mass produced. And when you over mass produce, obviously the value goes down. But the value didn't go down right away. The value went down, and I'll tell you when. The value went down after eBay and all those online places started to hit. And everyone's like, well, I'm going to sell my Wayne Gretzky rookie for $700 because that's what it's worth. So the next guy's like, I'll sell mine for $6. I'll sell mine for $5. I'll sell mine for $300. And then you start seeing the mass decline on sports cards. And that's what happened, Well, let's keep going here. Getting in over your head may not be a worry when housing prices rise 24% in a year. That's huge, people. Remember I told you guys, this is a big deal. As they were at the beginning of last year in Vancouver. But when the house prices are no longer shooting up, Canadian buyers must begin to think seriously about whether they are still willing to go out on a limb with their finances when they can expect no bailout from soaring property market. And that can have its own impact on prices. Other things being equal, without the reassurance that real estate will keep rising, the most cautious buyers at any level will scale down their aspirations. They may be less likely to throw themselves into bidding wars. In many parts of the country, that has not happened yet. Bidding wars continue to hit the news. Just last week in Brampton, the city outside of Toronto, a house attracted 500 viewings and 82 offers, selling for hundreds of thousands over asking. Lenders are usually careful to investigate the paying power of buyers through the maxing out of the bank's mortgages limits, often squeeze out their spending, leaving buyers house poor and with little in the way of emergency savings. The federal government has adjusted mortgage requirements to make sure that new homeowners have a buffer of if interest rates rise. Yes, a buffer, your TDS, total debt service ratio. There should be some sort of online. Just type in Google search, what is my TDS? Enter in all your expenses. And then it shows you what you have left over to buy food. TDS, you want your TDS to be around 35-40% because then it gives you a little bit of a cushion if interest rates go up. If your TDS is at 40, 45, 50, 55% or higher, I mean, if it's at 55, you're screwed because then you're buying your groceries on credit. It may be the current slowdown in the rise of house prices is merely a blip, a plateau before another climb. People have to live somewhere. Perhaps the demand for new housing in areas of the country where the economy and population are growing will force desperate house hunters to continue paying more and more than they would likely, simply because there is no alternative. But when the average house price begins to go flat, it is reasonable that some buyers will exhibit greater caution. When markets are turning, no one wants to be the person who pays the highest price. Nobody wants to be the greatest fool. So, I just wanted to throw this out there because it's a really good article someone sent to me, and I really appreciate them sending this article to me because timing the markets, thinking that property prices are going to continue to go up as they are, it's not going to happen, people. It's not going to physically happen. It's just like any market. People forget that the housing is just a market like the futures market, currency markets, gold markets, silver markets, bond markets, stock markets. They gotta understand it's a market, right? And people forget that. They're thinking, oh, no, it's a house, it's physical. I don't have a piece of paper stock saying I own a share of a company, blah, blah, blah. But this is a physical thing. It's a house. I could flip it and prices are only going to go up from here. They're not. So really research, check your TDS. So if you're looking to buy a place, you're looking to buy a house, and you're like me. I wanted to buy a house, and I started looking and thinking, a big city wasn't for me. A big city, I mean, it's nice to be in a big city, but when no one talks to you or everyone's pissed off and everyone's in a bad mood and dating is atrocious, shopping, there's nowhere to park because everyone's at the same place at the same time. Events is the same thing. You go to an event, you can't move around. So I bought my house. If you've been following me on this channel, and watch my video Living the Dream section of my channel, where I do a tour of my house. The house is 11 bedrooms, because I'm counting the extra rooms that I'm not using as bedrooms. I'm only using 5 for bedrooms, 4 bedrooms for us, and then 1 guest room, and then the other bedrooms like this, these big rooms with washrooms in them, I'm using them for offices, a gym. I'm going to show you guys my gym I'm going to set up. I'm going to build a sauna in one of the rooms. Things like that, a family sauna for us to use. But I paid $270,000 for this house. Why? Because it's 2 hours from the city. And watch my videos on this. I've been networking here. I've been doing really well here. And taking care of business, TCB, And family. And one thing, too, if you're looking to buy into the market, for the people that are looking to buy because they have a family and they want to expand and have more kids and stuff, my recommendation is just leave the city, and then if you could network and find jobs, and if you're handy enough, and you'll get around, you'll do well. But if you're in it to be speculative, I really recommend you check your TDS. Look at your total debt service ratio, your TDS and your CGS, and see where you sit. Because you got to make sure you have enough to buy food. especially if you're living in the house and hoping to flip it in the next year or two, or 6 months or 2 months down the road. And if you're on a variable rate mortgage, I strongly recommend that you get off that, because if the rates do go up, your variable rate that you have that's so low is going to continue to creep up to a rate where you just can't afford it anymore. Anyways, let me know what you guys think about this the fool strategy. Comment below. Thanks for watching, and don't forget to subscribe button.